Welcome to this explainer. Look, stepping into the financial markets with absolutely zero trading experience can feel, well, completely overwhelming, right? You're hit with chaotic charts, dense jargon, and nonstop news cycles. It's a lot. But today, we're just going to clear away all that noise. We're building your market foundation totally from the ground up, creating a structured roadmap to help you figure out exactly where you belong.
Let's dive right in with a bit of a challenge regarding your daily lifestyle. See, here's a secret most beginners totally miss: your personal schedule. It actually dictates your ideal market strategy. People so often pick a trading style just because it looks flashy, you know? They don't even stop to consider if they actually have the hours to pull it off. So before we even think about looking at a single chart, you gotta ask yourself honestly, how much time can you realistically dedicate to this every single day?
I really want you to absorb this next concept, okay? Speed without a process is simply gambling. It's absolutely crucial. If you don't have a written, tested, and highly disciplined process mapped out yet, jumping straight into fast-paced trading is just a massive mistake. Without rules, you're not participating in the markets, you are literally just rolling the dice. So we're going to start slow, we're going to build that process, and we'll only add speed once your foundation is rock solid.
All right, Section 1, the foundation, long-term investing.
You can kind of think of this approach like planting a tree. It's calm, steady, and it just grows quietly over time. This is honestly perfect for almost anyone, but especially if you're a busy working professional. Why? Well, it requires less than 30 minutes a day. Often it's just a quick weekly or monthly check-in. You don't need to be glued to a screen constantly monitoring prices. You basically just plant the seed, make sure the soil is healthy, and let the market do all the heavy lifting over the decades.
Now with this method, you aren't staring at little moving lines on a chart. Instead, you're going to use something called fundamental analysis. This means you're looking at the actual underlying health of a business. You'll evaluate company financials, check out the quality of their management team, look at their industry position, and study metrics like the PE ratio. The whole goal here is to capture capital appreciation, collect some steady dividends, and basically just benefit as the company naturally grows.
But hey, don't mistake a low time commitment for it being emotionally easy. Honestly, the primary emotional demand here is just pure patience. You have to be perfectly willing to sit through temporary market drawdowns without panicking. The market will drop sometimes, and your portfolio will definitely show red. But you have to remember the golden rule: time in the market is vastly more important than trying to perfectly time the market.
Moving on to Section 2, stepping up, swing trading.
So once that foundation is built and you find you can dedicate maybe 30 to 90 minutes a day after work, you can step up to swing trading. We're definitely moving a bit faster now, and this carries a medium risk level. Instead of holding on to things for decades, you're holding positions overnight, usually anywhere from a few days to maybe several weeks. Your goal shifts from that long-term compounding we talked about to capturing medium-term price trends or swings in the market. To pull this off, your tool set has to completely change. You transition from reading those dense financial statements to reading price charts through technical analysis. You're now looking at patterns, trading volume, and chart indicators to pinpoint precise mathematical entry and exit points. You aren't really as concerned about a CEO's grand 10-year vision anymore. You literally only care about what the price action is telling you right here, right now.
Emotionally speaking, this requires a massive upgrade in discipline. You've got to set strict rules, hold positions overnight while you sleep, and above all else, trust your stop losses. If you're not familiar, a stop loss is basically an automatic trigger to sell if a trade goes against you. You have to take that small loss gracefully, which, yeah, is incredibly painful for human psychology. But it is absolutely essential to prevent a tiny loss from snowballing into a total disaster. Which brings us to Section 3, the fast lane. Intraday trading.
Okay, this is the absolute roof of market complexity. It's incredibly fast, very high risk, and frankly, strictly reserved for those with 2+ hours available exclusively during live market hours. Positions are opened and closed within seconds or hours, all on the exact same day. Traders here frequently use leverage, meaning they borrow capital to amplify their returns. But be warned, leverage amplifies your losses exactly as fast as your gains. No joke.
Because you're trying to capture microscopic price fluctuations using highly granular tools, you're going to be wrong, like a lot. So what's the emotional requirement here? A totally steely mindset. You must accept frequent losses instantly, cut them, and move on to the very next trade without a single ounce of emotional baggage.
If you hesitate for even a minute just hoping a losing trade bounces back, the sheer speed of this market will absolutely crush you.
All right, Section 4. Which strategy fits your life?
So, now that we understand the 3 different floors, we really need to match them to your reality, based purely on the actual free time you have right now. If you've got less than 30 minutes a day, you are a long-term investor. Embrace it. If you have 30 to 90 minutes to spare after work, then swing trading becomes viable. But listen to me, unless you have 2 or more hours to just stare at screens making rapid-fire decisions, intraday trading shouldn't even be on your radar.
And honestly, there's a hidden reason to respect that time boundary too. Friction. Intraday trading generates massive friction through constant brokerage fees. Plus, in a lot of jurisdictions, day trading is actually treated as business income. So unless you really enjoy endless paperwork and, arguing with tax authorities, it's a major headache. Investing in swing trading usually fall under capital gains, which means much simpler compliance and generally lower tax rates. With day trading, your edge has to work overtime literally just to break even on the fees alone.
Section 5. The final comparison.
Okay, if you're going to take a screenshot of anything today, make it this matrix right here. It perfectly distills the goals, the risks, and the holding periods of every single approach we've talked about. Just look at the scale here. It's wild. As your holding period gets shorter, your risk level absolutely spikes, and your goal shifts from building long-term wealth to just chasing tiny little price fluctuations. Since we're starting with 0 experience, you really want to live comfortably in that top row for a while, at least until you've completely mastered it.
But here's an amazing pro tip from our sources. You actually don't have to lock yourself into just one strategy forever. A lot of successful participants use what's called a core and satellite approach. Basically, they build a solid, long-term fundamental portfolio as their safe core. Think of that as the vault. Then they use a much smaller satellite portion of their capital, money they can totally afford to lose, to practice swing or day trading. It's brilliant because it keeps your foundation safe while still letting you develop those faster-paced skills.
As we wrap up this explainer, I really want to leave you with one final vital question. Are you trying to force a high-speed strategy that completely clashes with your actual life and emotional bandwidth? Or are you finally ready to build a measured, disciplined process that actually fits who you are? Look, the market isn't going anywhere, but your success completely depends on building your foundation on reality. So, decide your time frame, trust the process, and go build your wealth on some solid ground.